Hey, this is Matt from InvestiQuant. Today is Thursday, May 14th, 2020. And yesterday we had a market that moved lower, closing at a 10-day low. We looked at that a little bit this morning, and what I want to do is follow that up with what has happened on that pattern according to the way that the day has developed today. So looking at the charts here, the ES in the top left, yesterday closed at a 10-day low. This morning we gapped down, tested lower beyond prior day low, and then pushed back up into prior day's range. We filled the gap and we've pushed even more beyond that. And we're currently holding somewhere in the top quartile or so of the range. But I'm going to go ahead and set this up just as we are seeing it here and run the results to see what it's led to going into the close. So I will set this up in all four instruments. We'll use an intraday time-based entry of 3 p.m. and an exit at 4:15 p.m. Eastern Time. The opening filter I'm going to use is gapping down, and then I'm going to build out this price action like we're seeing, where we have gap down, we've made a lower low, we have filled the gap, and we are trading in the top half of the intraday range. We're currently trading right around the top quartile, but I'm going to use the top half just to get as many samples as possible. Then I'm going to go to the price patterns, and I'm going to add that 10-day low close so that we're looking at this after a move lower. And lastly, I am going to come down to the indicators library and add that it is below a 200-day moving average, and then run the results. And here we go. So these are the results of going long at 3 p.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time, when the prior day closed at a 10-day low close under the 200-day moving average. The next day it gaps down, makes a lower low, and fills the gap, and is trading in the top half of the range going into 3 p.m. Eastern Time. So that kind of summarizes the price action that we've seen so far. The equity curve here, pretty ugly, very messy looking. To the right of that, we've got the stats. We've got 26 samples in the ES, 23 in the NASDAQ, 31 in the YM, and 39 in the Russell. So not a real common pattern. We saw that earlier when looking at this 10-day low close pattern. But let's see, what stands out here to me is the win rates aren't necessarily attractive. You know, some of them are just slightly favored. Russell's the best there at 62%, but ES, 58%. That's just slightly better than 50-50. NASDAQ slightly worse than 50-50, and YM slightly better. But the average loss on these is quite a bit larger than the average win. So when it's losing, and it's really apparent there in the equity curves you can see here, when it's losing big compared to what it makes when it wins. And just lastly here, something else that kind of stands out. This isn't a real common pattern, but the past handful of years, it's worked pretty well. And you can kind of see that by the equity curves that are just sloping higher ever since the 2008 sell-off. So it looks like it bottoms here around January 09. So that's right around the lows that were made in March of 09. Since then, it has pushed higher, and it looks like the ES here, the last 10 years it's happened 7 times. All of those have ended up being winners if you were to take that as a long setup. Let's check out the NASDAQ. NASDAQ, it's only happened 5 times in the past 10 years. 4 out of 5 of those have closed above that 3 p.m. price. Dow, looks like that's happened 7 times, and 5 of those have won in the past 10 years. And Russell, last 10 years, Russell had the most samples, 20 samples. Looks like 13 of those have won in the past 10 years. So a little bit better here in recent years than what it is overall, but long-term, not a real strong edge looking at the win rates going back to 2003. So hope you found that interesting. Good luck the rest of the day, and we will see you tomorrow.